McDonald's beat earnings estimates, boosted by higher menu prices. McDonald's, MCD, beat earnings estimates for the third quarter as higher menu prices boosted sales growth. Global system-wide sales, which include sales at company-owned and franchised restaurants, increased 11%. Same-store sales jumped 8.8%, higher than analysts' estimates of 7.79%, per Bloomberg consensus data. Revenue jumped 14% year-over-year to $6.69 billion, higher than estimates of $6.52 billion. Adjusted earnings per share came in at $3.19, up 19% from last year. The macroeconomic environment is unfolding in line with our expectations for the year, and we continue to deliver convenience and value for our customers, CEO and President Chris Kempczinski said in a press release. Shares of McDonald's are down nearly 3% year-to-date, trailing behind Restaurant Brands International, QSR, which is up nearly 2% year-to-date, but ahead of Yum! Brands, Yum! Shares, which are down nearly 7%. As consumers buckled down on where they spent their money, McDonald's said it got a boost in its home country. In the U.S., sales benefited from higher menu prices, new marketing campaigns, and growing digital and delivery orders. Beginning in August, the company launched its As Featured in Meal campaign that showed meals that have appeared in films, movies, or TV shows. Low-income consumers in the U.S., who make $45,000 and under, contributed to a slight dip in traffic, compared to a year ago in Q3, Kempczinski said on a call with investors. However, the company continues to gain share among middle and high-income consumers. Baird analyst David Tarantino said McDonald's typically gains foot traffic when there are mounting macroeconomic uncertainties, in a note to clients, adding that the Golden Arches is one of the best-positioned brands to navigate a tougher backdrop. During the financial crisis from 2008 to 2009, sales growth averaged 3.4% in the US and 6.9% in Europe, he said. The company also reported system-wide digital sales, which includes sales made on the app, delivery, or on the kiosk, totaled $9 billion across its 6 biggest markets, making up 40% of total sales. That's more than Q2, which saw $8 billion in digital sales. Kempczinski said the brand is building pretty significant scale when it comes to digital, which opens up a lot of opportunities and is difficult for our competitors to match. The earnings rundown. Here's what McDonald's reported, compared to Wall Street estimates per Bloomberg consensus data. Revenue: $6.69 billion versus $6.52 expected. Adjusted EPS: $3.19 versus $2.98 expected. Same-store sales growth: 8.8% versus 7.79% expected. U.S. sales growth: 8.1% versus 7.5% expected. International operated market sales growth: 8.3% versus 8.51% expected. International developed licensed market sales growth: 10.5% versus 8.27% expected. McDonald's also incurred pre-tax charges of $26 million, or 2 cents per share for the quarter, primarily related to its restructuring plan that saw the company lay off an undisclosed number of workers in early April. The fast food giant expects the total annual charge to be $224 million for the year. On December 6, the company is holding an investor update, where it plans to share more about its 2024 outlook. Kempczinski teased during the call that updates include information about its drive-through only location in Fort Worth, Texas. There is going to be an opportunity for us to have restaurants that are smaller footprint that don't have a dining room, he said.